What is up, YouTube? My friends, Bloodbath in the streets. That's the title of today's video. Guys, the Nasdaq was down more than 3% at its peak. It's hovering around 2 3/4 right now. The Russell is down 2.5%. Look at the Tesla chart. Big red bar, big red selling bar, dropping Tesla substantially. Just throw a measurement on here. This is a company that I do like. However, it is highly overvalued. 12% move in a day. Okay, we are entering a new phase in the market. It's going to affect crypto. I'm going to go over this with you guys by popular demand. I've been seeing the comments. I'm going to update my super bubble video and lay out for you the macro view, how I see it the next 6 to 9 months, as well as I'm going to be making new videos, particularly for trading commodities and for trading Forex and for trading stocks, okay? Because I'm going to be a brand ambassador for an exchange where I trade 100% anonymously. I worked out a fantastic deposit bonus deal for anybody that wants to join this exchange. I think you guys are all going to be very happy. I'll be talking about it and releasing it in my how-to video. All of that should be happening this week. So if you want to trade these other marketplaces, guys, there's an expression: millionaires are made in bull markets, billionaires are made in bear markets. You can make a lot of money on the way down, buy in at the bottom, and make money on the way back up. Let's talk about what's happening to crypto. All of this dramatically affects crypto. Microsoft reports earnings tonight. Can it save the Nasdaq? Now, you remember we talked about this yesterday, the reflexive rally. These are our March lows that we absolutely must hold here on the Nasdaq. This is a 618 at 12,997. As you can see, we are holding it right now. Okay, we're trying to hover between the 0.5 fib and the 618. Very important to hold these March lows because I'm still expecting that reflexive rally, action reaction, the rubber band effect. Now, how high will that rally take us? That remains to be seen. We have to hit key resistance. I'm hoping we can at least get back up to the 0.5 fib, 14,351. How does this affect Bitcoin? We went over this yesterday in the weekly time frame. These are weekly candles, our ascending triangle, bullish pattern, a complex pattern, 3 rising valleys pattern. You guys have heard me talk about this all the time. I added in this dotted line here for the low that we cannot lose, 37,161. If we do lose it, it doesn't mean you can't go up, but what it does mean is you break this complex bullish accumulation pattern, and then essentially you are just trading in this Wyckoff trading range, which we have to complete steps to see if we're going to be going down or up. Okay, now looking back here on the weekly time frame, I showed you those projections up and down, but these are big numbers: 48,289, 53 at the 0.5, and then going to the downside, 34,462. Well, look, you're at 38. Maybe you want to see closer projections. To do that, we're going to look at the daily, but also here on the weekly, you can simply take your swing low for trend-based fib to your swing high on this prior wave structure to your swing low, and you can see the fibs that you've been hitting. You hit the 47,243 here, you hit the 618 at 42,307, and most recently on this weekly candle, you hit the 0.5 at 40,782. Clearly a lot of resistance above you, and support, needs to hold. And if we lose this 37,161, that accumulation pattern is broken, and we're going to be ranging in Wyckoff. Okay, let's look at a couple other indicators here on the weekly, and then we're going to jump to the daily. So let's throw Ichi on here. We haven't done this on. I want you guys to see what's happening here on the weekly. This is your giant support cloud you built up from this bull run. Okay, you're dipping into the cloud. Couple of things to note here. Again, holding our ascending triangle, bullish accumulation pattern, breaks the upside 2 out of 3 times. You guys have heard me talk about these Kumo clouds now many times. This is the first trading method that I learned after Japanese candlesticks. Look at this. Look how thin this cloud is forming. You see this? Now, this could come up more, but as of right now, Ichi is a predictive indicator, and you can see this is going to be very narrow. The support level is going to be dropping off heavily, and this depends if price ends up falling through the cloud or not, but you can see this is an area where you could fall through, and this starts looking here at the peak around June, July. So, guys, you remember last year? Last year was our accumulation range in June and July, okay? So if we can hold this, move up, I think we're going to end up hitting resistance at a key level, potentially working our way down through this cloud, falling through the cloud. But the good news is this is a weak cloud. So we have the macro events happening with the Fed raising interest rates, 0.5 0.5 next week. GDP numbers this week. Lots of things happening. That 0.5 hike is going to go in at least twice, probably May and then probably June. Okay. And again, they can change it. They're not bound to any particular rate, but I'm thinking May and June is going to be 0.5. They're going to raise rates till they break something. Now, on a 100-year study, you hear the Fed talk about soft landings, how they want this to be a soft landing for the markets. On a 100-year study, every single time the Fed has had to raise rates and they, try to engineer a soft landing is a term that they use, they've only succeeded 10% of the time, meaning the markets will crash. I told you guys before, I predict most of this year is going to be very bloody. I do think they will reverse course when they break something in the markets. I don't know what that number will be. If the Nasdaq's already down 20%. If it goes down 30%, 40%, 50%, at some level, they're going to reverse course, and that will be a time for markets to rally. But again, secular bear market is what we're entering. A secular is a duration. It is a long-term event. And I know people have very short memories. I'm old. I'm 43. Traded the dot-com bubble, okay? I said this before. If you bought the S&P 500 in 1999 at its peak, you did not break even until 2012, 2013. This isn't ancient history. This was the previous cycle after this decade-long bull run that we've been on, okay? So if we do go into another more catastrophic bear market, being the fact that we're in a super bubble in housing and equities and bonds, we are in a super bubble in all of these areas. This could be a catastrophic bear market. So again, we're going to track Bitcoin closely. I'll keep you guys updated, but be prepared for most everything that you look at, whether it's equities, whether it's Bitcoin, to return back to those virus lows, okay? Prior to the injection of the trillions of dollars of stimulus. I'll update you guys in a new video with the Fibonacci waves that show that confluence as well. But let's go ahead and look at this. So the weekly, you have your thin cloud here. I do anticipate a reactive rally to rally up and then fall back down again, okay? And then can we hold on to that support? I mean, that's the key question. Let's see if there's anything else here that we want to look at on the weekly time frame. Again, I don't trade on the weekly, guys, because it is the weekly time frame. These candles are massive. Some of these candles are 10,000 points. You can't necessarily get a good entrance off of it, but what you can get is forecasting and look at big macro movements. Here you can see the supply demand zones, as you can see. And again, this area was very expansive due to the bull market. You see your heavy demand zone line, and it's just been getting, this range is getting tighter and tighter. I showed you this on the daily, but instead of having these big expansive movements, you're getting a tight range where something is going to have to break. You're going to have to break through the supply zone or fall through the demand zone, and then you'll have a new direction for the marketplace. Let's go ahead and look at the daily time frame. Guys, we beat this to death, so I apologize, but the numbers are what they are. The 618 at 44K is absolutely crucial. You can see here in our mini cough, we're still holding our range. Again, we just made a new low versus yesterday's low, but we're still holding this range. Let's go ahead and throw a fib on here and see exactly what we're hitting. It's probably like the 0.5. And so to do this, let's go up here to the 48,266, down to the swing low, and then up to that swing high. 0.5 fib, 38,264. You can see you hit it almost on the dollar yesterday. Let me zoom in. Almost on the dollar yesterday, and then you wick through it today and pulled back above it. You need to hold this, okay? You need to hold this because, again, if you look at the 618 at 37,121, bounce back to that weekly. Remember that weekly chart. Let me turn the Nubia off. That weekly chart, we have this. I put a line here so you can see where this bullish accumulation pattern is broken. 37,161. Okay, if you break that line, you break the three rising valleys pattern. Now, you could pull back into the ascending triangle, which would be good, but you break the three rising valleys pattern, which is a complex accumulation pattern with a strong ability for a good upside. Okay, so we need to not touch the 618. So you got a little bit of wiggle room, but not much. Hopefully, and what I think is going to happen, these companies are not coming out necessarily with bad earnings. Some of them are, like Netflix had a big subscriber dip. Netflix, being one of the FANG stocks, has lost massive amounts of money. I said that before. It is a $200-something stock. It was over $600 last year at its high. Okay. So if Microsoft comes out strong, if Apple comes out strong, I think the general consensus from watching the business news all day, these money managers, they keep talking about, oh, this is actually a good price, that you buy when you're scared, all that stuff. I think we're going to potentially have a nice rebound. It could be a strong rebound, okay? And if it is a strong rebound, you have to watch Bitcoin because it'll pull the crypto market with it. And it has to be pretty strong. So we're going to need some strength to get up to 44. And again, if we flip it, watch that one fib at 48,266. The stronger the rally, the better. Okay. People that are holding spot, people can trade longs. And then when you get rejection, when you rally to resistance, because to be clear, that's what I expect to happen. This isn't a rally to go to a new all time high. This is a rally to resistance for you to lock in profits, tighten your stop loss, and then potentially short the reversal. That's what we're looking for here on a rally to resistance because we are in a bear market, and this bear market's going to continue as long as the Fed continues its policy of quantitative tightening. And it hasn't even started unwinding its $9 trillion on its books. Okay, wait till that starts happening. The markets have a lot more to give up. So Bitcoin and cryptos will have a lot more to give up in the near term. Okay, so let's look at our indicators and we'll wrap this video up. I know everybody has a busy day. Let's check out, let's see if anything's changed here on the daily for Ichi. As you can see, we're below the cloud. And again, we talked about this the other day, super thin cloud developing, okay? So could we be below this cloud for some more days here? This would take us out to May. I think we're going to make a move before that, whether we fall down or start coming back up. That volatility is what we need to look at as well. We talked about it yesterday, how it was tightening. I believe it is beginning to open up. So let's go ahead and look at that. It is opening up, but right now the moving average is moving to the downside, obviously with Bitcoin dumping. So we need this moving average to flip back up, which again, Bitcoin will follow the Nasdaq and the Russell. It will follow the tech sector. So if those move up, you're going to see Bitcoin move up. And again, the 618 right on top of this support cloud, which is now resistance, and the 233. Great target, guys, at 44. Watch that like a hawk if you see us going up. And of course, the 0.5 where you got to already before you reject it at 42,714. Start looking at these near-term targets. Look at velocity of price, okay? How do you judge if it's a breakout? You want to see a big bullish candle with follow-through, okay, for volume. Big bullish candle with follow-through. Download a relative volume indicator or download advanced volume from Fractal Trade 15. I've given this out a few times now. He marries relative volume here. You can see the shadow. He marries relative volume with your volume bar, okay? And you can set that limit. I have mine at the default, which I think is 2 times, but this is how you look for breakout volumes. And you want to see something like that if the markets do rally at some point this week. Look to pull Bitcoin up and see some follow through, and then see if you end up making a top, just like you did over here. Look at your previous examples. Look at your wicks, getting supply wicks, making a double top. There are ways you can judge the marketplace, guys. And of course, you can come trade with us and join our Discord and get this education, get the live streams, and get the TA from professional traders in GAN and Elliott Wave and Harmonics and in Wyckoff. So let's go ahead and look at a couple more things here on the daily. Let's turn off Ichi. And let's see if we have anything. Let's check out our VPVR if that's changed at all with this new candle action. I like to be consistent with my reference points. So we're going to pull back in December 4th, okay? So you still see we have the point of control above us. That's that peak volume resistance. We are below our pocket here, so I'm not thrilled about that, okay? You see this pocket? Let me pull this back in. This pocket, this is where we were having our safe haven here of price consolidation. Price needs to rebound because, as you can see, look at the declination in volume. Okay, going back to December 4th, that makes it easier to fall. Remember, volume's resistance, volume's also support. It's activity in the marketplace. And if you start have declining volume, it doesn't take as much effort to drop the price. We need this to pull back up, get back into this range. And again, I do expect that to happen. Hopefully, it'll be a rally this week because next week with the Fed coming out the interest rates, I mean, it's game on. The markets could dump, the markets could whipsaw, they could dump and then pump. It's highly irrational, highly emotional. Lots of retail, record retail came into the markets last year. They're still here. So we got to see how this all plays out. As you can see, our ATR is kind of getting up to its area where it's been peaking out here. You see that's been kind of petering out at this level. So this may be it for the move. We may just be holding this bottom as of right now, which would be great right here at the 0.5 fib. Okay, again, a key fib. Hold that, recoil, come back up. I want this explosive move up. I know you guys do too. Be fun to trade, and it'll definitely be fun to capitalize wherever we stop on the flip side on the way down. Guys, check out marketmakers.trade if you want to come trade with us. And we do have some free downloads there on the website. Join that free member section. I forgot to promote this. We actually have a harmonic PDF, a X5 pattern PDF, all the Fibonacci patterns that we're aware of. And we have a chart for you to download if you want a reference guide. It's pretty cool. One of the admins put it together, so you can get that for free on our website. Those new videos will be coming out this week. Let me know what you guys want to see. I'll be putting those videos out and answering your comments and questions. And guys, happy trading. Talk tomorrow. Take care, everybody.